Hey everyone, last week a very experienced commercial real estate investor sent me an article that had a very alarming headline that read, "Multifamily distress nearly triples in 6 months." In the email, the investor asked me, is this it? Is this the wave of distressed deals that's finally coming? Quite frankly, I think a lot of investors are still anxiously waiting for the flood of distressed deals to hit the market. They see it as an opportunity to acquire properties for pennies on the dollar. But I don't think an opportunity of that magnitude will emerge. And along that vein, I continue to question the validity of a lot of the distressed real estate headlines we see. Is there a kernel of truth in the headlines? Usually. But is the situation as dire as they make it sound? Probably not. When I looked into the data underlying the big headline about the tripling of multifamily distress, it was measured on a percentage basis, and their measurement of multifamily distress had climbed from 2.6% in January to 7.4% in June. But that data source's definition of distress includes a big chunk of performing and non-performing matured debt. Basically, loans that have come due, but where the owner is still likely negotiating with the lender. Their definition of distress also includes loans in special servicing that are actually current. So I think the extend and pretend model is still in play in many cases, but from what I hear, lenders are starting to phase that out. And remember, just because a property is technically in distress doesn't mean it will come out to market as a foreclosure or as a significantly discounted fire sale. But I am starting to hear that several lenders are beginning to shift gears. Some lenders are beginning to sell off loans that they think pose a high risk. A lot of these are poorly performing office buildings as well as some weaker retail properties. Basically, banks are trying to quietly clear the high-risk properties off their balance sheets. On the other hand, I recently heard about a bank that foreclosed on some properties, but rather than selling them off, the bank is continuing to operate the properties, apparently waiting until values climb. That's a bit unusual, but it basically appears that banks are offering much less forbearance and they're holding owners' feet to the fire on properties in well-performing categories like industrial, some types of retail, medical office, and apartments. But here's the good news. First, in general, delinquency rates are still low by historical standards. The CMBS delinquency rate, only including loans that are 30 days or more delinquent, are still low. For apartments, it's currently just 2.4%. For industrial, it's 0.6%. For retail, it's 6.4%. And for office, the one property type still facing real headwinds, the delinquency rate is 7.6%. About on par with where it was in 2017, but still below the financial crisis peak of 10.4% set in 2012. The second piece of good news is that interest rates appear to be on a downward trend. The 10-year Treasury is around 4.25%, down from the recent peak of 4.7% about 3 months ago, and from what appears to be the cycle peak of nearly 5% set in October last year. With the Fed beginning to signal an increased likelihood of a rate cut in September, and with inflation showing a clear downward trend towards the Fed's target, it looks like we're on the backside of the high inflation, high interest rate cycle. We're not through it yet. There are still some headwinds and some choppy water ahead for us, but it does look like we're through the worst of it and the market is beginning to turn. So, as you're perusing headlines, remember to take them with a grain of salt. Don't take them at face value. Dig under the surface with a shovel, not a rake. And at the end of the day, don't get too caught up in the media. Take a moment to look forward. Ask yourself what the market will look like at the end of your hold period. What things will look like in 5 or 7 years. Because at the end of the day, real estate is a long-term investment and you need to keep your eyes on the horizon.